everyone, we'll go ahead and get started. Thank you for joining us on another episode of Blockchain Banter, DeFi debates and hot takes. Today is part two of the dishonesty behind the metrics. Last week we spoke to TVL as a service. This week I thought we would kind of revisit that maybe just a little bit and get into trading volume and APY. I have with me Joshua Baker is the CEO of Aori and Mark Richardson, Dr. Mark Richardson of Bancor and Carbon DeFi. Thank you guys so much for joining us. Josh, what is your take on using these two? And you can speak to either one if you feel stronger about one of them over the other, um, as one of the major metrics of, evaluating the value or the success of a DeFi protocol.
Yeah, I think it's definitely misleading depending on each individual protocol and like what their unique value changes, like just in like a very simple definition of like maybe why TVL is a really bad metric for like Uniswap, for example, in terms of like gauging like the usage or usability would be like, UniV2 whenever you stake your assets are placed along the entire curve. But for example, UniV3, you can have these concentrated liquidity positions and therefore theoretically be more capital efficient. And so, the capital is much tighter towards the bid and the ask. So, maybe we should discount UniV2's TVL versus UniV3, for example. That's a totally valid, argument. It's super dependent upon the protocol, I would say. Like lending markets, maybe TVL is an amazing, metric that actually, defines a lot about the protocol. But for DEX, a little bit less so. I think I quite like trading volume as a metric in general, or sometimes what like certain places will call normalized trading volume, which is basically their best attempt at getting rid of all wash trading, and then doing analysis on that. I think there are definitely like a protocol should do the work to figure out what their KPI is, like what their number one metric is, and then explain why that is and like why that's the metric that they're optimizing for, and then maybe let their community decide on whether or not they agree with it. But that's kind of my take on it. Is I mean, if you think about why like these metrics come into play, like why people love TVL, why people love volume, it's just because it's something that is unifying across an entire category of like exchanges or lending markets or protocols or whatnot. But yeah, I definitely agree that they like can be misleading about protocols. Absolutely. So yeah.
Thank you. Mark, I noticed that Mark rejoined. I'm curious if we have audio here.
Can you hear me?
We can hear you. I can kind of recap a little bit of what you had said last week. Because the major question that I had was, with TVL being offered as a service, is it unethical to continue using this as the major point that, or metric that these protocols are reporting? And Josh, you were kind of just saying, they should explain why they're reporting this. Right. Mark, you said last week you didn't really think that this was necessarily unethical, that they were just giving users what they wanted, right? They want to know the TVL, they want to see TVL. And you can correct me if I'm wrong. I don't want to put words in your mouth. And maybe am I summing that up kind of correctly, accurately?
Yeah, I mean, I guess. I mean, there's definitely there is a good argument to be made, I think, in both directions. One is, let's say on the one hand, um, you you want people to sort of play the game fairly, right? You want to know that if a protocol has an enormous TVL, that it's because that protocol um, is in and of itself successful and popular out of its own, for its own merits, I guess. And why do you want to do that? Well, for a lot of these protocols, the token, in a sense, is kind of an investable vehicle based on the protocol's popularity. And so, if you are trying to speculate on a token because it belongs to a successful DeFi project, then you could make the argument that if you are artificially elevating the TVL, then you're kind of tricking people into investing in a token, based on faulty data. But then on the other hand, the there is nothing that says that the TVL associated with a protocol has anything to do with the token price, or ever has, for that matter. And so I think it comes back to whether or not investors have created their own sort of bullshit metrics, to use when they choose to buy tokens, and it just so happens that those metrics are something that you can manipulate without needing to actually appeal to a broad demographic in any way, right? You can emulate a successful product, at least in the eyes of investors. So yeah, I mean, I don't know. I'm not sure who's to blame, right? Either it's the people that kind of collectively came up with these metrics in order to speculate on the price of different tokens. Either they're at fault, or the protocols that have now realized that they can imitate success by paying for people to make them popular. But in that sense, I think it's pretty much the same as getting Chris Hemsworth or someone to wear your clothes, right? To make your clothing brand look more successful, or getting them to wear your watch so that you can sell more, Rolex Submariners this season. It's a marketing budget like any other, right? I think in all of these cases, you're trying to appear more successful or more appealing than you actually are, and that's just marketing.
Josh, when you said earlier, Mark, you might have missed this, and Josh, maybe you wouldn't mind just repeating it for Mark. You were talking about the difference between, reporting a trading volume and normalized trading volume, and how this is the volume that should be reported, right? They've kind of eliminated the wash trading. Do you see normalized trading volume being reported by anyone, or is it just trading volume?
Yeah, CoinGecko has a normalized trading volume report, as well as I believe Masari does also. I think I probably would say Masari's is probably a little bit better, but I can't, that's just a hunch. It's kind of an attempt to look at like the order flow and look at like the volume in real time, and try to like clear out any suspicious matching trades. Pretty much every, in my trading days, like pretty much every single example of wash trading was painfully obvious. These people are not sophisticated actors; they're just people running wash trading bots they found on GitHub and forked. And so, like you'll see like 25 orders all get matched 1-to-1 that all have the exact same size on both sides of the trade, like 10 orders in a row, instantaneously matched without ever hitting the book. It's like, oh, something's kind of suspicious here. It's quite easy to kind of filter that stuff out. Yeah, I was just referring to that because that's kind of a way people can kind of validate, to a degree. Of course, it's not like scientific. Some level of like air quotes real trading volume.
So for the protocols that are reporting this sort of trading volume, right? Well, we've got an increase in trading volume and everything else, sort of like they do as the TVL, right? With the TVL. If that's a service and they can see this, and you said it's painfully obvious, then is it unethical or is it wrong to be reporting this as if it's normalized, as if it's real?
Well, so you're specifically talking about like DeFi protocols. I was just specifically referencing centralized exchanges for the most
Okay.
part, that are doing this, because that's the only place right now you can do a lot of like that, like which is basically just order spoofing. Um, in terms of like decentralized exchanges, I think, yeah, I mean, I actually definitely don't think that. I mean, as someone who's never done this, but like TVL like purchasing from like some like big whale or something, because I think effectively like that is what most liquidity mining is. That's what like most like token incentives and incentives in a marketplace are. I think there was like a great tweet from like a couple years ago from I think like Xerix Racer that was like we build protocols that we have to pay people to use, referencing like liquidity mining and whatnot. And I was like, damn, that was so good. And so yeah, it's like this is kind of part of crypto. It's like we're the first people to use like you know incentive mechanisms like that built into core like web infrastructure to incentivize usage. So it's kind of a built-in thing whether you're doing it to the public or to an individual. It like kind of doesn't matter. It's the same thing. But yeah.
I know that you have to drop. I know you have a hard stop. I wanted to thank
Yeah, thank
yeah
you.
for joining us up here for the amount of time that you could, and I look forward to speaking with you next week.
Absolutely. Thanks everybody.
Thank
Bye.
Mark, do you mind staying on with me for a few?
Sure.
Okay, cool. So the trading volume then, right? Maybe not normalized trading volume versus just trading volume, but we see different chains. New chains are launching, and these are sort of the metrics that are being used to measure their success, right? So not necessarily a DeFi protocol, but kind of more broad across the industry. We see this being reported as a metric used to evaluate the success of something.
Yes, absolutely.
What's your
I
what's
thi-
your position on that? Because I would think that you can see when there's this sort of where new wallets created. That's another one that we see quite often, right?
Well, I mean, it depends. Okay, let's. I think TVL and volume is about as helpful as likes on a Facebook post or likes, on a Twitter thread or something like that. There, if let's imagine for a second that I am about to start a business as a Twitter influencer in cryptocurrency. One of the things that I might do is I might have a look at, the amount of followers that I have. And I don't know how many I have today, maybe like 2,000 or 3,000 or something. And I might go, I need more followers. And so what I can do, or at least until Twitter started dropping this, this anti-bot campaign, but up until like yesterday, I could have just run a script to create sort of 10 or 20,000, Twitter profiles, and have them all just follow me so that it looks like I'm, now in the sort of 10K or 20K club. Then what I can do is start writing a couple of Medium articles, maybe a couple of YouTube videos or something like that. And then with all of those 20,000, you know, fake profiles that I've just created, I'm going to have them like and retweet and everything, to try and get my statistics up on the content that I've just created. And now, when I go to someone and say, hey, I'm the super successful influencer, you should pay me to make material. And if all they do is look at how many followers I've got and how many times my posts were liked and retweeted, then that is the product, I guess, right? Is the person who is employing me to do something as an influencer, are they actually interested in the material that I'm creating, or are they only interested in the fact that I've got a bunch of likes and retweets? Because if it's just the likes and retweets, there's literally nothing unethical about it, because they essentially got what they paid for. Whereas someone who might only have a few dozen, followers and something, whatever, doesn't have nearly the same credence, I guess, for these kinds of metrics, but might actually create better content. And so if you go to a customer then and say, look, I've only got a few dozen followers and stuff, but I expect it to increase because look at the quality of the content that I've actually created. And then they look at that and go, wow, actually, you are a really terrific journalist, or you are a really terrific whatever. You've got a very good, deep insight into, what's happening. Yes, I will employ you to write my material for me, or to produce whatever it is that I'm offering to produce for them. In the first instance, I could have, put any sort of garbled nonsense together, because it doesn't matter what the quality of the content is. All that matters is that I've got a whole bunch of followers. It doesn't even matter if they're real, right? They can be fake followers. Um, and so in that first instance, if the customer doesn't care about the quality of the content, then and they only care about the illusion of reach, then I don't think that there is an ethical issue. Whereas if I said that, in the second instance, for example, where I don't have many followers, and instead of creating really great content, I actually just plagiarized some content from someone else that I know, then there's an ethical problem, because I'm offering something that I can't deliver on, or that I'm using someone else's material in order to get a position that I don't deserve. So that would be an ethical problem. But I think in the case of these protocols that are renting their TVL and wash trading their volume in order to appear more popular or more successful, there are, again, two different camps. Either they are pretending, it could not just protocols, it could be entire chains. Either they are pretending to be successful because they are trying to encourage investors to invest in something. Maybe they are preparing for a seed round, or whatever. Maybe they're going to do another, maybe they're going up for a Series B or a Series C, or whatever it happens to be. In which case, hugely unethical. In fact, it's not just unethical, it's blatantly illegal. If investors found out that you were sort of manipulating these kinds of statistics in order to squeeze more dollars out of them, or to overinflate or overquote the value of what it is that you're doing, then that's an actual crime, and people go to jail for that kind of thing fairly regularly. So that's bad. But if you're just doing it to do it, because you want people to think that your product is better, then you really are that person that is, just spamming Twitter bots so that you can go to someone and say, "Hey, I'm a super successful influencer, but don't bother reading my content." And the people that are, interested in those kinds of narratives are the client doesn't care about the quality of the content that's being produced. They just care about the illusion of it. So I can, there are cases where it's totally fine. There is that no one is being exploited. It's just two idiots, patting each other on the back, telling each other how good they look together, and that's fine. If that's really what makes people happy, I don't mind letting them do it. But if they're doing it in order to try and make their token more valuable, then yeah, it's not just unethical, it's illegal.
Okay, let's go back to the influencers because you were speaking about that. And this was something that I was trying to allude to last week, and I might not have been so clear in my message. But you're saying, you can have an influencer write a thread or something of the sort, right, about your protocol or about whatever it is that you're offering. But they are expected to say, this was sponsored by, this was paid by, this project, right? We see this. There's an obligation to do that in some areas by some people, right? This is
I think that, well, yes and no. Depends on the jurisdiction. For example, I think in the UK, there's been a very like the government has come down really, really hard on making sure that it is black and white when something is a paid advertisement and something isn't. Um, but then places that aren't the UK, you'll find that influencers still do it because it allows them to introduce a fee tier into the services that they offer. So you can get them to write something, and they'll say, "Yeah, I'll write this, and it'll be $5,000. But for another $5,000, I won't tell anyone that you paid me to do it."
okay.
It's kind of like protection money, you know.
Okay, so the market makers or whoever it is that's offering this TVL as a service, you don't think there's any obligation by them at all? Or I guess I should say not obligation, but is it unethical to provide this sort of service to these protocols? I understand everyone's getting what they want, right? The protocol or the project wants to look as if they're more successful. If people are using this metric to measure their success, users want to see a high TVL, right? And they're providing this service. But with one of those two, you don't see it at all as being unethical or at least deceiving. Can we use the word deceiving here? Maybe not necessarily unethical.
Sure, but the question is, who are you deceiving and why? Because you can deceive someone, and it's not unethical to deceive someone. It's unethical to deceive someone to achieve a nefarious purpose. And the question is here, like, what is the nefarious purpose? And that's what I think is kind of sad about it, is that there's no, if the market maker or whoever, like any of these shops that are providing liquidity to your system and expect to be paid for doing it, I think they're just offering a service. And I don't think that they have I don't think that they are obligated to anyone to talk about it, especially because I think that it might even, there could be privacy issues associated with that, for example. But I honestly, yeah, I don't think that they would. They don't have any. They don't have any ethical obligations to anyone, because I mean, why would they?
Okay, let's talk about APY then for a minute, because you're talking about, a nefarious purpose, right? The purpose of, well, first, let me ask you your opinion on APY, because I had brought it up last week. You are the project lead for Carbon DeFi, and in the beginning, Carbon was, reporting an APY. This stopped. It's now ROI, right? The current ROI of a strategy that someone's created. Maybe
Yeah,
explain to me why, what your opinion is on APY.
I don't like. Well, I don't think anyone in cryptocurrency knows what an APY is or knows what the difference between APR and APY is. But the major problem is that when you are reporting something that's time dependent, usually you have to do something to sort of normalize or sample out the time so that you're not multiplying or dividing by extremely small numbers. So, for example, if you let's say that you go out into the street and you see a quarter on just lying there, and you pick it up. How long do you think it's going to take you to pick up a quarter off the pavement?
Not long.
How long?
I don't know. As long as it takes me to bend down and pick it up. 3 seconds, 2 seconds. I don't know.
Yeah, 3 seconds.
Okay.
Good. Fine. Let's do 3 seconds. So 3 seconds. So this means that you are, so that means given a minute, you could pick up 20 quarters.
Okay.
Right?
Okay.
So 20 quarters a minute is $5, and that oh god, sorry, something wrong with my PC.
You're fine.
So that divided by, so if it takes you 3 seconds to pick up a quarter, that's 20 quarters a minute, $5 a minute. If we multiply that by 1,440, we get to $7,200 a day. And if we then take that and multiply that by 365.
I see where you're going with this.
So yeah, so the point is that if you picked up a quarter off the street and observed that for those 3 seconds you are earning $2,628,000 a year, like is that a reasonable like way to report the outcome?
Not at all.
And that's what DeFi protocols do. They let you pick up a quarter off the street and then tell you that that's the same as earning $2,628,000 this year.
So you
Because you just need to pick up a quarter. If you picked up a quarter in 3 seconds, just keep doing that. If you do that every 3 seconds all year, that's $2 million, $2.6 million. That's how APYs are calculated, and I think it's a dumb idea.
so you see this differently then, obviously, than you do the TVL as a service, or you do trading volume.
Well, I mean, APY, you're trying to get someone to like the only reason you report an APY really in this industry is to try and get people to use your protocol. It's to trick them.
Right. This is the nefarious sort of purpose that you were referring to earlier.
Right. By literally, baiting people into taking an action that they wouldn't have otherwise taken.
I mean, why are we still reporting this as if it's one accurate? Right? Is it just because retail users believe it is? So they're just continuously being reported as if this is feasible? Because it's not just the amount of quarters that you have on the ground, right? Or the fact that you might want to stop and eat at some point. Like these tokens are actually losing value. You look at liquidity mining rewards or something of that sort, right? You're exploiting this token. So you're not just saying, okay, if you just pick up X amount of quarters every 3 seconds over a year, great. You're also assuming that this quarter or presenting this quarter as if it's going to have the same value. You're doing the same thing with these tokens. So the industry, I mean, these DeFi protocols are giving users what they want to hear or see, knowing that it's not true. Never mind, any sort of IL or, risk that they're taking on in addition to that. When we spoke about TVL last week, you said that this was more on the users, right? Because this was a metric that they were sort of demanding. They were asking for
Yeah.
this.
Yeah. So there's a difference between telling someone, I'm going to give you $2.6 million to use my protocol, and you should use my protocol because 2.6 million other users have. If you're just joining a protocol because you think that the TVL is high and that means it's a good protocol, you deserve, how do you have so little, critical faculties that we need to go back to that thing that your parents told you when you were 2 years old, right? Which is if everyone started jumping off a cliff, would you do it too? And in cryptocurrency, it turns out the answer is yes. People jump. People will watch everyone else jump, and then we'll go after them excitedly. But I don't really have any sympathy for those people. But the people the protocols that report an APY and say, look, this is the reason you should come to my protocol. That is a problem. So the difference is in one of these situations, the TVL of a protocol being high shouldn't influence your decision to use it. If it does, you are the idiot. But if a protocol reports an APY that's dishonest, you are not, an idiot for falling for it. You were just being lied to, right? Because one of these is is designed to influence your decisions. The other one, you were just letting your decisions be manipulated. There's a difference.
Are there other metrics you view similarly to the way that you do APY? You see this as an outright, like a blatant lie, right? This is deceiving to users.
I don't understand most of the protocol reporting metrics don't make any sense. I don't even know why we have protocol metrics.
What?
Either people like the product and they want to use it, or they don't. If it's almost like, I've always referred to them as vanity metrics because it is trying to make the industry into a popularity contest. And it's an absurd one because it's not like any of these protocols, the most successful ones included, have ever made any money. We just saw recently, like Uniswap is now having to turn on like a front end fee because they've been losing money hand over fist for, since their inception, and they will continue to lose money hand over fist. I don't know I haven't met a single protocol that's made any money the last 4 years. And so there's a lot of pride, I think, in trying to get these metrics up so that you can sort of puff your chest out and say, like, look at my protocol and how successful it is, and I'm a king of Web3. But that's it. That's all people are buying, and it's the protocols that are buying it. And so, yeah, if you've got the cash to, to rent enormous amounts of TVL for your protocol so that you can feel important, then go right ahead. Like, I don't think that there's any sort of problems with that. But if you need to sort of resort to tricking people into doing something that they wouldn't have otherwise have done, then you have to start asking, why are they doing that? And it's usually not the case that it's because a protocol wants to appear successful. I mean, certainly that's a part of it. We see a lot of that already, but it's mostly because it's actually a rug pull, and people are more interested in having you deposit liquidity there so that some some permissioned EOA can withdraw the funds on the other side. So no, the high APYs are much more closely correlated with criminal activity, whereas the high TVL, it has nothing to do with trying to get you to do anything. It's just people wanting to pretend that they're important.
Okay, so all of these, what you call vanity metrics that are used to value, or
That's the point. It's not used for anything. These vanity metrics achieve nothing.
they're
It's just so that people can write back to their parents, my protocol has $1 billion in it. That's all it does.
So how do you measure the value or the success of DeFi protocol if it's not from these vanity metrics?
I don't. Why? Like, why would I want to do that?
Well, what about well, because there's VCs that are investing in some of these.
Yeah, but I'm not a VC.
I understand that. Asking your opinion on this.
If I was a VC, I would be much more interested in the business model rather than, how many users you have. If I was a VC, it would probably deeply concern me that we've got protocols that have advertised the amount of users and volume and things that they have and still haven't made any money. Right? Like, if I told you that I've got this great protocol that's done $3 trillion in volume over the last couple of years and has had more than 100 million, unique wallet connects, and during that time, I still haven't made any money, what are you going to think about about my acumen as a business developer? Like, how much better? Like, what are we? My question to someone like that would be, what are you waiting for? $100 trillion in volume? Like, do we need to get to a quadrillion dollars in volume before you're actually profitable? Has the reverse effect, right? These vanity metrics that people are paid for, it makes them just look like bigger failures.
And what about for retail users or for those that are looking to buy their token and bet on the success of the protocol, a DeFi protocol?
Yeah, I mean, it's a tale as old as time, right? It does not matter how popular the protocol is. The token can still be worthless, and there can be tokens that are extremely valuable that are associated with projects that aren't nearly as popular as the industry leaders. I think if you're looking to buy a token, like for the explicit purpose of selling it to someone else later at a higher price, you need to ask, how does that value manifest? Because you can't just buy a token for something like, I don't know, like, let's say that you and I were to start a new project on Base to compete with Friendtech, and it's a similar protocol. We mint a governance token for it or something like that. you now have to ask the question, or even if it's not a governance token, let's just say it's just a token that's got the same name as the project. You still have to ask the question, even if this this protocol that we launch becomes the next Facebook, right, or the next Twitter. Like, imagine it's so popular that it actually starts to encroach on the value, or the market share of normal non-Web3 social media offerings. That would be huge. That would be absolutely huge. Token would still be worthless.
So Josh mentioned earlier, and this is something that you had spoken about previously as well, but I think it's really relevant to this discussion is, he mentioned a tweet that he saw calling out that DeFi protocols are paying people to use their services, right? Is this finally really actually catching up to the industry and why we keep seeing this more shift? I mean, we saw Uni, like you had mentioned,
Yeah,
adding this.
yeah. Everyone's running out of money. They raised, in like 2018, 2019, 2020. They built a bunch of protocols and paid to make them successful. They might have started a bull run in the process, which I guess no one was complaining about. But then, the market crashed and we're in a bear market, and all of the tokens that they might have collected money in suddenly aren't worth anything. And so, yeah, runways are drying up, businesses are going bankrupt, and VCs are starting to take the founders of these protocols to court. So, yeah, I do think that a lot of the projects, a lot of everyone's favorite projects, right, are desperate, are running desperately low on funds, because over the time that they've been, building and developing their products, most have failed to get anywhere close to a sustainable business model. And the venture capitalists that poured money into these projects were expecting a sustainable business model, not a whole bunch of vanity metrics and a wild fan base on Twitter. If you can't monetize that kind of fandom, then you've really got nothing at the end of the day. And a lot of these businesses have literally nothing. They might still have a couple of $1 million up their sleeve or something from the fundraisers that they did, but very, very few have got any intellectual property. And in a world of what is essentially just code on a blockchain, it's very, very difficult to imagine being able to create a moat around what you're creating without intellectual property. So you would have seen already that with some of the projects that are creating front end fees and other things surrounding their products, just how easy it is to go and use 1inch instead and interact with the contracts directly and avoid having to pay the fee at all. These kinds of things, to a VC, that's extremely dangerous. And you might even say negligent, and it is grounds to sue. So yeah, it's I do think that I agree with what you said. I think that a lot of the people that we called leaders in this industry over 2018, 2019, 2020, 2021, and even into 2022 set an extremely dangerous precedent of appear successful by any means necessary, even if it means that it's going to cost you all of the capital that you raised. And I think that that's the corner that a lot of these organizations have backed themselves into.
One last question. Do you think, I mean, it's been 3 or 4 years for a lot of these DeFi protocols, right? Any other business, I mean, that's a long time to start, to go through to finally start thinking like, hey, maybe I need to make some money. Do you think they themselves believed in these vanity metrics?
Yeah, of course. Yeah, in a way, I do think that they did. Yeah, they thought that Bitcoin was going to go to $1 million. They thought ETH was going to go to $50,000. They thought that that Web3 was important enough or revolutionary enough that all of a sudden normal that common sense, I think, in business planning somehow didn't matter anymore. That we're going towards this revolutionary new system, and money doesn't matter anymore or something. Yes, I do think that they drink their own Kool-Aid a little bit too much.
Really enjoyed having this discussion with you, and thank you for kind of breaking it, giving us your point of view. I know, like you said, you're not a VC, and maybe you're not the average retail user, but hearing your opinion as the leader of a DeFi protocol who has created a business model behind it, I appreciate hearing your thoughts on it.
It's been frustrating for me for years, talking to people in the space that rather than wonder why some things are like, they just take things at face value. They're told to value certain aspects of a protocol, like, I don't know, yeah, things like how much TVL it has or how much volume it's getting, and like, look how successful it is and things. And then they'll go, oh, it's really taking off. I've got to buy this token and so forth. But then, under pressure, it's like, why? Like, what does the token have to do with any of those things? And just the amount of times that someone has failed to draw a straight line for me, like a causal relationship between their investment choice and the metrics that they're paying attention to, is just staggering. So don't be one of those people.
Awesome. Thank you so much, Mark. Definitely appreciate you staying up here and hanging out with me, even though Josh had to drop. Um, we have another Twitter Spaces, or X Spaces, I guess I should say, on Friday. So I hope to see everybody then as well. Thank you so much for joining us and for listening in.